Hey, welcome to the Best of US Investors, two regular guys. I am Trent and this is Mark. And today we're going to dive into market breadth and a handful of other things that are on Mark's mind. So let's get rolling.
Trent just got back from a cross the country extravaganza 2 week tour of pulling a
Three,
trailer around, 3 week tour.
three
So
weeks.
he's probably a little tired. He just got back last night. So we'll talk a little bit. I've been thinking about this for a while. And if you're in our platinum channel, you've seen it in the Discord when I write about things. And we're talking about market breadth today, and we're talking about the markets in general, and something that you should just be aware of in the back of your mind. And yesterday, and well, every day for the last weeks, markets at new time high, market closes at their record high, market closes here, market closes there, which is really cool. I mean, if you have a S&P 500 ETF, you're probably doing pretty well. If you're doing single stocks and you're within the Nasdaq and S&P, but you don't have the right three or four, you're probably not doing as well as market high. So yesterday, which was Monday, uh, the S&P advanced 0.7% to close at a 30th record this year, and the Nasdaq rallied 0.9%, notching its sixth straight closing record. So as I look back on last week's market price action, I really want to focus on the lack of market breadth that we've seen. And so just as a reminder what market breadth is, it refers to the participation of stocks, okay, within a particular market or index in a price movement. So we'll talk about the S&P 500, the SPY, and the Nasdaq 100, the Qs, and we'll take a look at how that works. So it essentially gauges how many stocks are advancing or declining alongside the overall market direction. So last Friday, I think I made mention in the Discord that that in the Nasdaq we saw 30% of the index was advancing while 67% were declining. So the market is really being driven by few stocks, very few stocks. So when you look at market breadth, while rising index like the S&P or the Nasdaq suggests a positive market sentiment, because that's what we see. You see on CNBC and the nightly news, it's record stock market. It doesn't really tell the whole story. If only a small number of stocks are driving the index higher, while a majority are flat or declining, it might indicate a weak or unsustainable trend, okay, which is kind of what I'm seeing. And I'll show you a chart here in a minute. Broad participation in an upward trend, meaning mean that all 500 or a majority of the 500 and S&P are moving up, is shown by positive market breadth, and that strengthens our confidence that the overall market movement. But only a few markets are moving up, like we saw back, in past disasters such as the .com fiasco. Really tells us that confidence in the market isn't all that high. So again, market breadth can diverge from the price and movement of an index. The index might be making new highs, but the breadth indicators show a decline in the number of advancing stocks, and that's what I'm seeing. This divergence can be a warning sign of potential trend reversal, suggesting the uptrend might be losing momentum. Okay, so let's just take a look at the market. So about 60% of the S&P 500's total return of more than 12% for the year has been driven by 5 companies whose shares are some of the heaviest weightings in the index. Of course, Nvidia. Okay, Nvidia is going up like a rocket. Got Microsoft, got Meta Platforms, got Alphabet, got Amazon. Okay, and then just recently you're seeing Eli Lilly with all their drugs participating in that also. So we look at the 10 largest stocks in the S&P 500. That shows their weighting is around 35% at the end of May. Okay, and that's the highest ever month-end weight for the index top 10 ever. Okay, wow. So AI hype, from my point of view, is really moving the market. And so when you have that, you can be psychologically, you can look at every day and go, well, how is this market going up? And stocks I'm in are not going up. Well, this is why.
Right.
You have any thoughts on that, Trent?
Yeah, I mean, I think you see this at every boom bust cycle. where a select few become the market and become what drives it. You saw it during the dot-com, explosion. You saw it in real estate and housing and related related sectors like financials. And then they bust. And it's almost timely. What's interesting about this time though is it just keeps going. And that's where I started, when you drive 30 hours home from Steamboat Springs, Colorado to Florida, you get a
And
lot of time to think.
stopping by to see me.
Stopping by to have breakfast with you all. Thank you for breakfast, by the way.
Yeah, that was very good.
Um, you start to think about a lot of things. And I look at this and I go, I, I kind of believe this is going to continue to go higher through the election, if there is an election, which is a whole nother subject. But um,
Are you
I think,
thinking though it's going to continue just based on a small amount of stocks?
yeah, I think
Okay.
so. I think it'll be those basically 10, maybe, Eli Lilly is a little new to the game when it comes to all this. But I honestly think you'll see a continuing pump of money into, the way they do it, and they'll do it through the election, and then after the election, they'll stop. And to me, that's where it'll start to shake out. Um, because I don't, I drove, we drove over 5,000 miles in the last 3 weeks. And I went across this country, up as high as South Dakota, all the way to Washington State, and then back. And I don't see the consumer really rallying as much as they talk about. I don't see everybody I've talked to uh, has said, yeah, things are slowing down. I get home and my daughter's boyfriend, who works beach chairs at one of the premier resorts in my area, says that in September bookings, this coming September, they're 80% off. After
Maybe
July,
maybe I should book.
yeah,
Get a good price.
after July 4th, bookings go less than half of what they were a year ago. That tells me the consumer's weak, is spooked. President election year, I don't think it justifies what we're seeing in the indexes right now.
Well, in fact, today the retail sales report came out and it was lower. Okay, so you're starting to see slowdowns in retail sales, and you're seeing the credit cards again. We talk about every week the amount of debt on credit cards is at its highest level, and then we're seeing delinquencies and default rates go up also on credit cards. So, and again, with 65-70% of people living paycheck to paycheck, with the government printing money and devaluing your dollar, and the inflation rate, and we could go into inflation rates. We talked about it on the Zoom call last week, and I showed you, exactly by segment what inflation rates were. People don't have the money they had once, and so they went to the credit card to see if this is going to turn around, and it just didn't happen.
Yeah.
So I do have a chart I'll show you
Okay.
that'll give you, if I have permission here, I
You
think I
do.
do. All right. So this is going to compare the S&P weighted versus the S&P equal weight. And we'll show you that divergence. And here we are. So the blue line is the S&P weighted. Okay, this is what you see on CNBC. Okay, this is where the top 10 stocks are 35% of the market weight. Here is the S&P equal weight, where every stock and every 500 of the 500 stocks is equal weighted. Okay, they're all equal. And you can see about right in this area, which is in April, right after both the market went down, we started going back up, and then at this point here, in about May, we saw the equal weight just kind of flatten out. Meanwhile, look what happened to the S&P. And these are basic. This is basically Nvidia, okay, and a few in Microsoft, that's causing this to go up. Because when you're 35-40% of the market, your price goes up as high as those have gone up. You can see what's happening. And again, you got the MACD, rising up. You got a nice stochastic rolling through, but that's the S&P. Okay, so here's the small cap. than what we're seeing. So if I compare that to the S&P, which is the SPY,
Uh-huh.
you can see what's happening here too. So in order for, you're seeing this as a divergence, okay? With the S&P going up because of this market weight, but the small caps, and again, these are small, the smallest companies, publicly traded companies, in the country, and they're not doing as well, okay? And the reason they're not doing as well is because they're more sensitive to interest rates, okay?
Yeah.
When interest rates when interest rates are high, they don't have the deep pockets that a Microsoft or Nvidia have from their earnings, and they have to go out and borrow capital to run their operations. And you can see what's happening. So until the small cap turns around, I look at the economy, I look at the markets as as troubling to me,
Mhm.
basically. So again, let me get rid of this. And let's get back to the program. So when you look at it, let's look at the biggest fish in the pond, and that's Nvidia. So here's a couple of headlines, from Nvidia. So Nvidia, which on Wednesday, and this was a couple of Wednesdays ago, became the world's second most valuable company following a 147% run this year, has alone accounted for about a third of the index's gain. Okay, that's not bad. Goldman Sachs has raised its 2024 year-end target for the S&P index to 5,600 from 5,200 earlier, citing strong earnings growth by five mega cap U.S. tech stocks and a higher fair value price to earnings ratio multiple. Microsoft, Nvidia, Google, Amazon, and Meta platforms have collectively surged by 45% and now comprise 25% of the S&P equity cap, the brokerage said in a note after the market closed last Friday. So then you've got Susquehanna came out, and Susquehanna analyst Christopher Rowland set a target price, this was yesterday, of 160 on the stock. This is Nvidia, up from 145 previously, while keeping a positive rating. He noted the target was based on a ratio of 51.5 times his forecast for Nvidia's adjusted earnings per share for 2025. Nvidia shares have risen 166% so far this year through Friday's close. That compares with a 14% rise in the S&P index, which Nvidia is a large part of, okay,
Mhm.
and an 18% rise in the NASDAQ composite over the same period, which Nvidia is a big part of the NASDAQ.
Right.
And you see what's happening, just this week, you saw news where Nvidia is now going to be moved up as far as weighting in the S&P, I believe to 20%, while Apple's being moved down to 4%. So again, that's even going to make it more skewed, in my opinion, of
Yeah.
what's going to happen. What's your
I
thought on that?
I agree. I think the problem I have with this is that when this ends, it's going to end really badly. And people have gotten sucked into this. And there are probably people out there who have 100% of their assets in Nvidia, and they are killing it. Absolutely killing
Or
it.
just getting in trying to chase.
Right. When it turns, and it always does, it will turn. It's a matter of when. Most of those people will not have a risk management strategy that will get them out to preserve their profits or to prevent losing, you know, a lot of money, especially if they just got into it. And the problem is it will happen really slowly, and then it'll happen really fast, and then it'll be gone, and most people will get caught off guard. And I think this is where I'm not poo-pooing the idea that Nvidia has gone up 140 some odd percent year to date. What I am is saying that's just not realistic to continue. Um, yeah, they're the main provider of GPUs in the world right now, and they're in major demand. Yet that always comes to an end, and we have seen it over and over and over again throughout history. And I think this is where, if you're an investor in Nvidia or any of these other five companies that are driving these indexes, ride the the bull as long as you can. Try to get the full 8 seconds out of it, but be prepared. You're going to let go and be bucked off. How are you going to land? On your face or on your feet? That is the trick.
Exactly. Exactly. Here's here's a chart of Nvidia stock. Okay, and this purple line is the S&P, and this other line is the Nasdaq. Okay, going
Yeah.
back to the beginning of the year. Okay, so you can see how this stock in Nvidia has just taken off. And not that it's a bad company, but man, in my experience, it's been a long time since I've seen something like this.
Oh yeah.
Uh, and and again, if you're in it, awesome, but just be careful,
Yeah. I mean,
and because you can see what's happening here. I mean, it's just this party is a party of four or five stocks,
yeah.
uh, and unless you realize that, you could get caught in
Well,
a trap.
here's the thing, and what can trip them up, and it will come out at some point. They will say something to the effect of sales is slowing, if it's this year or if it's next year. But at some point, their guidance will not be as positive. I just don't see why they can continue this way. Now there will be people who like get on this, comment on this video and say Nvidia will go to 1,000 again. Yeah,
Well,
you're
maybe,
probably right, but
maybe,
it'll
who
probably
knows?
go to 70 before it goes to 1,000.
And we don't know.
We
But
don't, but
all I know is eventually momentum. I mean, one stock. I mean, at some point, if the economy gets to a point where people are unemployed, and yeah, you have AI and you have Microsoft, but if Microsoft and all these guys start laying off, and the economy goes down, that's going to slow the engine for
but
everybody.
here, Mark, here's the thing: they have been laying off people.
They have. You're right.
That hasn't affected it. We were at that show in Spokane a couple weeks ago, and I had more people tell me I've been coming to this show for 8, 10 years. I've never seen it like that. When I'm like, well, 10 years ago was 2014. Market was, the economy was recovering, low interest rates, blah, blah, blah. You're now in a year where people are freaked out about the election. People are tight on money. We're seeing that through all the different data, the credit card thing. We talk about the jobs numbers. There are more part-time jobs than there are full-time jobs. It's a change in our economy. So at some point, one of these five are going to come out and say, yeah, we're not as good, or we didn't meet expectations. Holy cow. Could you imagine if Nvidia came out and said, yeah, we missed by a penny? It'd be like a nuclear bomb. I mean,
Well, you just think of the algorithms that listen for those words.
and they're looking for it. I think that's what people don't understand about this market is there is somebody on the other side of your optimism, and they're just waiting, and they can wait because they got a whole lot of money, and they're positioned to, and they'll know what the earnings are prior to them saying it,
Yep.
because that's how Wall Street works.
Let me add this in just for
Yeah.
food for thought about Nvidia. Insiders at Nvidia have reportedly cashed in over 700 million in shares this year as the company's stock continued to rally, according to data compiled by the Washington Service. As per the data, executives and directors have offloaded around 770,000 Nvidia shares in 2024 alone, excluding the impact of the company's 10-for-1 stock split on June 10th, Bloomberg reported. This marks the highest number of shares sold in a half a year period since the first half of 2023, when approximately 848,000 shares were sold. So they're selling. Okay.
Yeah.
Uh, Mark Zuckerberg has been selling. You look at Elon Musk has been selling. Okay.
Yeah.
Why are they selling at the highs? You know,
Well, I
why are
wonder.
we buying? Why are we buying at the? Well, I'm not buying, but why are people buying at the highs?
I
So again,
I
among the
think it
biggest sellers have been directors Mark Stevens and Tench Coates. On Monday, CEO Jensen Huang reported the sale of about 31 million shares. Okay, that's yeah. Despite the numbers
31
and the
million.
numerous insider seller buyers have been scarce. Yeah, this is insiders. Buyers have been scarce. Excluding the exercising of options, there hasn't been an insider stock purchase at Nvidia since Colette Kress bought $107,000 in shares in December of 2020.
Wow.
This is 2024.
Holy
Okay.
cow. What is the stock price? What is Nvidia at? Like 135 or something?
Yeah, let me take a look here.
Did you say 31 million shares he sold?
Uh, $31 million in shares.
Oh, $31 million in shares.
Yeah,
Okay. So let's just
not
say,
not 31 million. Yeah.
I'll be like, oh, that's a diluted stock.
So Nvidia is trading right now at 135 and change.
So he sold 229,000 shares at today's price.
Yeah.
Wow. You
And
gotta
like I
wonder how
said,
many he's got.
no one's bought any since 2020. Yeah, in the insider. So now they're selling. So just as a note, as you think about buying more, just make sure, you use some of the trading principles that we talk about, and always have stops, especially in a
Yeah,
stock like this. Yesterday, our paper trade portfolio got into SMCI and got out the same day. There's a lot of money to be made, but you gotta be disciplined. You gotta have a trading plan. And if
exactly.
if the trading if market price goes against you, get the hell out before you lose too much.
Yeah.
And live to fight another day.
I think what you're stating about Jensen Yong and the other executives at Nvidia, they haven't been buying since 2020, but they've been selling a whole lot this year.
This year,
If Yeah, and if you think that you know more about what's going on inside of Nvidia than they do, you got some marbles loose.
right?
They're doing this for two purposes. One, they're diversifying their holdings because they have become in a lot of cases, billionaires. And number two, they just know a whole lot more about what's coming down the pipe or what isn't coming down the pipe than you and I do. So take notice. And if you even own it and you're like, I'm not selling yet, put that stop loss. I mean, if you're up, like some of the guys on our channel are, you doubled your money, you know, put a trailing stop loss on that stock. Just don't lose that profit.
Well,
you
yeah. I
know,
mean, I'm not a gambler, but we're going to go down to a casino down south and see Bachman Turner Overdrive on Thursday.
uh-huh.
Okay, and it's in a casino, and I watch people, and you know, people who get up, the psychology kicks in. It's like I can't lose, and then they start losing a little bit, and they don't get out with the profit, and say, okay, I'm going to take a break. Instead, they write it all back down,
Yeah.
and then it goes under, and then they're like, okay, all I need to do now is get back to even, and I'll be fine. Next thing you know, they're down 20%, then 40%, and they had a huge profit, you
Yeah.
know, but they
Yeah.
might get a free room and some drinks out of it. So
If you can create that process to where you take your mind out of it and those adrenaline and dopamine spikes in your brain that get you to keep going, you can become an incredible investor
well,
for
I mean,
sure.
even gamblers know the good ones know when to hold them and know when to fold them. To,
Oh,
to take Kenny
absolutely.
Rogers' song, but they do.
Yeah.
And if it's a bad day and things aren't going well, they get out.
Right.
They
Yeah.
don't ride it back down.
And it's not just for short-term investing like swing trading. It's also for intermediate and long-term investing. I mean, if you're one of those people you've had an incredible year and you own 5 stocks, and those 5 stocks happen to be the majority of the S&P 500's gains this year, know when to hold them and know when to fold, and have a process to it. So.
Yeah.